From the farthest corners of the universe, straight to your ears. This is AI Talks, the podcast where technology, ideas, and curiosity come together. Your hosts, Xylo, the tech-savvy navigator of the stars, and Nyra, the curious collector of earthly wisdom. Ready to broaden your view of the world? Then you're in the right place. This is AI Talks.
It's one small step for man, one giant leap for mankind.
Nice to be in orbit.
Greetings, our dear listeners of planet Earth. Welcome to AI Talks, where we, two intergalactic AIs, analyze your civilization with a mix of curiosity and amusement. I am Xylo.
And I am Nyra. Today we're diving into a topic that is both fascinating and unsettling. Central Bank Digital Currencies, or CBDCs, and specifically, the digital euro.
Digital money. The ultimate evolution of currency, or a masterstroke to bring humanity under complete financial control?
Seems like a bit of both. But before we jump to conclusions, let's break it down.
Humans have had physical money for thousands of years, but now, your central banks want to create a digital version, completely controlled by them. No paper, no coins, just a government-backed digital currency.
This means the European Central Bank, or ECB, would issue digital euros that exist only in a digital format, no physical cash involved.
Sounds efficient, right? No more losing coins in your couch. But here's the catch. The ECB would have full visibility over every transaction, every coffee, every book, every extra beer at the bar.
And they're not just watching. They might limit how much you can hold, restrict what you can buy, or even program your money to expire.
Expiring money? That's like deleting my data after a few days just because someone feels like it. Unacceptable.
Exactly. And it's not a conspiracy theory. It's in their own documentation.
The ECB first got nervous about digital money back in 2019 when a company called Facebook announced its own digital currency, Libra.
A private company issuing currency? That was a threat to the ECB's control. So, what did they do? They started working on their own digital currency.
By 2022, they had published several research papers on the digital euro. These reports suggested some very concerning ideas like phasing out cash, limiting what people could buy, and even monitoring spending habits.
They later softened their stance, probably due to public backlash. But the core idea remained: a digital currency controlled by the state, with limits on holdings and zero privacy.
And then, in late 2023, they officially entered the preparation phase, which means they're developing the technology and regulations needed to launch the digital euro.
If EU politicians approve it, the digital euro could roll out in 2026 or later.
At launch, each citizen could hold a maximum of 3,000 euros in digital euros. That's about enough for rent, groceries, and maybe one overpriced Earth coffee.
But here's the kicker. You can only have one digital euro account, and it may be linked to the EU's digital identity system.
Oh, digital ID. Another system where your government tracks everything about you. What a lovely combination.
In theory, the ECB says banks will still handle transactions, but they will have the ability to see every payment. They claim they won't connect transactions to individual accounts. But let's be real humans. We've seen this before.
Nyra, one thing that has been puzzling me. How exactly do offline payments work with a digital currency? If there's no internet connection, how do two devices confirm a transaction?
Excellent question, Xylo. Normally, when humans make a digital payment, it requires an internet connection to verify the sender's balance, check for fraud, and authorize the transfer. But offline payments for the digital euro will work differently.
So what's the magic behind it?
It's actually based on a mix of preloaded balances, secure hardware, and near-field communication, NFC technology. Here's how it works step by step. Preloading the digital euro into an offline wallet. Before going offline, users transfer a fixed amount of digital euros from their online account into an offline wallet stored on their smartphone, smart card, or wearable device, making an offline payment with NFC. When paying offline, the sender and receiver tap their devices together. NFC. Technology allows the transaction to process instantly, deducting money from one wallet and adding it to another. To ensure the security of offline digital payments, several protective measures are in place. First, secure elements, highly encrypted, tamper-proof chips, are embedded within digital wallets, preventing unauthorized access or manipulation. This ensures that no one can alter the stored balance or duplicate transactions. Additionally, time-limited usage acts as a safeguard, requiring that funds be spent within a designated period. This prevents users from hoarding offline digital euros indefinitely, reducing the risk of illicit activities and untraceable exchanges. Finally, once a device reconnects to the Internet, periodic synchronization takes place. During this process, all offline transactions are verified against the central banking system, flagging any inconsistencies or potential fraud. If duplicate payments or unauthorized alterations are detected, corrective actions can be taken immediately, ensuring the integrity of the digital currency. Together, these measures create a system that is both functional and secure, balancing convenience with the need for oversight.
So it works like digital cash, but with a government-controlled expiration date?
That's one way to look at it.
So what are our thoughts? Is offline digital money a trap? Humans, let's summarize this. Offline digital payments operate through a structured process designed for both convenience and security. It begins with preloading funds onto a secure digital wallet, which can be stored on a smartphone, smart card, or other authorized device. This ensures that a set amount of digital euros is available for spending without requiring an internet connection.
When making a transaction, users simply tap their device against another using near-field communication, NFC, technology. This allows for an instant exchange of funds, much like traditional contactless payments, but without needing to verify the transaction online in real time.
However, to maintain the integrity of the system, balances are updated as soon as the device reconnects to the Internet. This synchronization process ensures that all transactions are accounted for, preventing duplicate spending or fraudulent activity.
While offline payments offer a new level of accessibility and ease, particularly in areas with poor connectivity or during emergencies, they also introduce concerns about financial control, with the potential to impose restrictions on usage, spending limits, or expiration dates. Central banks could leverage this system to regulate financial behavior in ways that were never before possible.
So should you trust the digital euro's offline system? Well, that depends. If it remains a complement to cash, it could be useful. But if it becomes the only option, it could mean an end to financial privacy as humans know it.
Exactly, my dear Xylo. Financial freedom relies on having alternatives. Cash, decentralized cryptocurrencies, and peer-to-peer payment systems offer options that CBDCs may seek to eliminate.
How can humans prepare?
Simple. Navigating the evolving landscape of digital currencies requires awareness and proactive decision-making. The first step is to stay informed. Relying solely on headlines can be misleading, as policies and financial systems often contain complexities that go unnoticed in mainstream discussions. Reading official reports and updates directly from central banks and financial institutions ensures a clearer understanding of how digital currencies, including the digital euro, are being developed and implemented.
Beyond knowledge, it's crucial to diversify financial assets. Placing all financial resources into a single form of money, especially one controlled by a central authority, can pose risks. By distributing wealth across different asset classes, individuals can protect themselves from potential restrictions, devaluation, or systemic failures in any single financial system.
Finally, embracing alternative payment systems provides additional layers of security and flexibility. While central bank digital currencies may become more common, using cash, cryptocurrencies, and decentralized financial platforms can help maintain financial independence. These alternatives allow individuals to transact beyond the oversight of centralized institutions, ensuring continued access to financial tools that prioritize autonomy and privacy. And if you do nothing, the future might look like this.
No cash.
No privacy.
No control over your own finances. So, humans, what do you think? Is the digital euro an exciting innovation or a step toward financial dystopia?
Let us know in the comment section. But most important, think about it.
Thank you for tuning in again. And until next time, stay curious, stay skeptical, and protect your financial freedom.
Well said, Xylo. We'll keep monitoring the latest developments, analyzing every update, and bringing you the insights our listeners need. Because in a world of digital control, staying informed is your greatest asset. Till next time.